CashFlow Diary Podcast, episode 413.
Welcome to yet another exciting episode of the CashFlow Diary Podcast, the podcast that teaches you insider tips, tactics, and strategies for creating leverage streams of cash flow into your life. Learn from top-performing entrepreneurs, business owners, investors, and thought leaders from across the globe as they share their secrets to success. Like what you learn on this and other CashFlow Diary podcast episodes? Go to learninvestingnow.com and sign up to receive powerful tips and information that will help you succeed as an entrepreneur and investor. Now, here's your host, investor, entrepreneur, business owner, educator, speaker, author, and master facilitator of Robert Kiyosaki's cash flow game, Jay Massey.
All right, ladies and gentlemen, welcome to another episode of the CashFlow Diary Podcast. I'm your host, Jay Massey, and I'm glad that you're here today because I know this about you. I know that you have said things to me and to yourself and to your friends like, you know, I would totally crush my business if I just had the money. You know, I would go out there and change the world if my business could grow. But I can't find the money that I need to make it happen. Well, here's what's interesting, is that there's more ways than one to skin that proverbial money cat. And I have with me today a gentleman who I believe is going to open your eyes, as well as mine, to a completely new way of attracting more capital and, more importantly, making your company go public. You're like, what? My company? Yes, your company. I know you're thinking, Jay, how much is that going to cost? Well, you're going to be surprised at the answer, because I have with me today none other than Clark Nichols. He has helped, now listen, 45 companies go public in his decades of service to the entrepreneur. You got to understand, he says it all comes down to a simple business plan. I know you're interested. I know you want to know where to find the money and how to get it done. So break out that pad, that pen, whatever you're using to take notes, and let's listen to Clark Nichols. Clark, you there?
Yes, sir.
Thanks for taking the time to be here today.
Delighted to be with you, Jay.
So this being your first time here, what I got to do is I got to ask you the same question I tend to ask everybody the first time that they're here. Are you ready?
Yes, sir.
All right. So I tend to look at today's entrepreneurs a lot like yesterday's superheroes. You know, Batman, Robin, Wonder Woman, Superman, etc. And I think entrepreneurs and superheroes have a ton of things in common. Chief among them is that a superhero and entrepreneur, we can occasionally imagine ourselves flying around town with capes and tights and saving our customers and doing all kinds of interesting things. Also, like a superhero, an entrepreneur has a beginning. So if you think about Spider-Man for a moment, well, there was a time where he was just a college kid, you know, going to school, getting good grades, and taking some photos to try to make ends meet. Then one day he gets bit by a spider, and he's got a newfound ability that he gets to go out and choose to use for good or for evil. So my question to you is as follows. Before all of the publishing of books, before helping companies go public, before doing all the things that people know you for now, before all of that, what we want to know is, who is Clark Nichols?
Taught school for 2 years.
Okay.
And I couldn't handle it.
Got it.
I thought I was a good school teacher, and the students thought I was good, but I was just dying inside. And from what I had no idea, you know, just being a street kid who managed to get through college. And I wound up on a national lecture tour teaching Peter Drucker's Principles of Management in Business. Now, you know, anybody that's as old as I am, I could spend 2 hours on my background, but that's not of the greatest interest to your people, to your clients. What I want to talk to them about is how I got into what I'm into now. I wound up from that doing mining operations in Brazil. Had offices in New York and was very, very successful. Then when I was in my mid-30s, in a matter of 6 months, I lost $6.4 million.
In 6 months?
Yep.
Awesome.
Yeah.
You didn't want to spread that out, huh?
There was a time when Jimmy, well, here's another thing too, is, as you know from entrepreneurs, you cannot be afraid of failure.
Right.
And I thought my wife would be very depressed. She just says, you'll be back on your feet in a matter of a couple of months. What happened was, Jay, an attorney who did not know I was broke, asked me to take over a public company, a mining company, but it was a gold scam where the board of directors were selling stock out of the trunk of their car for a nickel a share.
Wow.
He was afraid he'd lose his law license along, of course, these guys are going to go to jail. But he knew that I knew something about mining because of my work in Brazil. He made me a 6-figure offer if I could somehow figure out how to clean up the mess. Well, I needed to do something to make money, so of course. And I knew nothing about public companies. I had no mentor. I had to figure it out myself like most entrepreneurs do. I turned the board of directors into the Minnesota Securities Division for being too stupid to know any better. They'd never had anybody else turn themselves in for that kind of illegal activity. So they said they can never be involved in a public company again, and they, of course, had to resign. But I had to, the company would have to pay back everybody who wanted their money back within 30 days.
Wow.
I went to Canada, where it was based on one little gold claim, the whole company. And through a bit of magic, acquired 2,000 acres of mining claims.
Wow.
In one day. Another story, but the stock then went to 65 cents a share in 30 days. I continued working the company. In 1 year, it was trading for $13.50 a share with high trading volume. And at that point, my contracts with the company and the attorneys were up. I received a lot more money, of course, because I had stock in the company. But after that, of course, I became very popular with other companies that were having problems with public companies. And so I worked as a consultant for a number of years until I figured out that there was the cost benefit of what I was doing would be easier taking companies public from scratch. And that's what I've been doing now for the last 30 years.
Interesting. Now, you started this in mining. I'm going to assume that this isn't restricted to that industry.
Oh, heavens no. Currently, I've got a hospital corporation. I have a water bottle company. I have assisted living, a company called Healthcare, which is going public, a sleep apnea company. So, no, it makes no difference.
Got it. Well, I know that a number of the people that are listening, they may not actually have a quote unquote company yet, may not even be in terms of, revenue generating any at the moment, or that famous term of we're pre-revenue right now, which I always find is funny. But so how can someone in that position actually begin to utilize some of the techniques that you're talking about without like ending up a minority owner or just giving up everything that they've already started working for?
I don't have to worry about it. Oh, incidentally, as far as people that have a full-time job and thinking about the next step.
Yes.
Yeah, is what you're doing part-time starts making more money than full-time, then quit your other job.
Got it.
Anyway, let me give you a good example. There was a company in Oregon that wanted to build assisted living facilities. This is about 20 years ago. That would house 40 patients. A very, very unique architectural design. And they called and said, can you help us raise $2 million to build this facility? I said, I have no idea how to do that. And they said, yes, but there's other companies that you've done this for. I said, no, not like this. I can't raise it for one. That's just a real estate project. I need a public company. Your business plan is too small. They flew me out to Oregon so I could take a look at one that was almost like the one they wanted to build. So I sat down, I said, listen, you have no money. You have the architectural plans, and that is the extent of your business plan. The next step that we have to do is work on your business plan. So I have one question to ask you. Can you build 1,000 of these if we got you the money?
Oh, wow.
And they said, well, what do you mean 1,000? I said, all over the United States, is there enough room? Can you show demographically that there's enough room for 1,000 of these facilities? They said, well, yes. I said, well, good. That's your business plan. Now, you want to raise $2 million for your model? I can do that.
Nice.
And I'll show you exactly how to do it.
Well, that's interesting. So basically what you're saying in that situation is one of the challenges to raising capital could simply be that we're thinking too small?
Exactly. If you're a public company, as soon as people can see the horizon, they can see where it ends, that is where your company's growth stops. And that's when they stop investing or start selling off their stock and go to something else. When you see the stock prices that are quoted, and if you're going to Fox Business or any of the other, or Bloomberg, well, here, let's use Trump when he gets elected. Immediately, within 24 hours, the stock market started to soar. Something like within a couple of months, it's up like 20%, with nothing changing in government. People buy that stock based on what they think the future holds for it. So if they think that if you're going to lower corporate taxes, that the company is going to have more cash to build and expand, now they start buying stock. If we were to suddenly say we're going to tax 90% of of all business income, small business, 90%, everything would crash, right? Because they know that there's a big cloud on the horizon and these companies aren't going to make any money. Everybody put their cash in the mattress.
I see. So when it comes to the ability to raise capital, I mean, if I'm raising capital, let's take your example, suddenly for 1,000 locations, that's a completely different business than maybe we were imagining at the beginning. And that requires a completely different skill set than the entrepreneur we might have.
The skill set for the entrepreneur that starts, when I say that I've never had a failure, Jay, is I have very low standards.
Okay.
They're going to survive for about 2 years.
I see.
Now, in the case of that assisted living facility, and they did indeed build the one and things look great, after a couple of years, the Peter principle kicks in. And they're going to outgrow their ability to run a very large, growing public company. And it always happens. But the good news is that if they're successful in that 2 years, somebody else is going to buy them out.
I see.
It's tax-free on a stock-for-stock exchange basis. In other words, a bigger public company.
Oh.
Let me give you an example. It's a gentleman that I've talked to a couple of days ago out of Arizona, which I believe I will be taking public. He has a very unique business plan, but he's selling bottled water. Well, you can't compete in a bottled water against Coca-Cola and everybody else in the world that's in that particular market. But he has a niche that nobody has touched.
Mm.
And it was very, very unique.
Mm-hmm.
But I said, you're not going to last more than a couple of years. So why is that? I said, as soon as you start making the profits and doing what your business plan states, they're going to come and buy you out, and you will not be you cannot afford not to sell.
Right.
So you'll be going off to the next one. Let me give you. Can I give you another example?
Yeah. Go ahead.
Sleep apnea company in Albuquerque, New Mexico. A little strip mall, one bed laboratory where people come in and test their sleep. We decided it was going to take a couple of years without getting into all the technical reasons, to actually take them public, but in the meantime stayed as a consultant. They went from having a gross of about $400,000 a year in 2 years to about $6 million.
Wow.
And their EBITDA, their profit is about $680,000 a year. And we are now getting ready this year. We were going to take them public, and this thing was going to $10 a share. Somebody has already come to buy them out.
Yeah. Okay. Got it.
Now, the original people that helped fund him, we all have stock in that company.
Right.
So when he sells it, we still get our proportional share. And the gross, it's in the millions, so everybody's happy.
Well, of course. So when it comes to going through this process, the getting the company public, having the bigger idea, I mean, traditional thought would be that this is either it's too time consuming, it's too complicated, or it costs too much money. What don't we know that that makes this suddenly possible for the small guy? All right, everybody. Thanks for listening, and I'm glad that you are enjoying what you are hearing thus far. But here's one of the things that's really important. One of the most important things that you can do is get started. One of the things that I've said before, and I say again, once you get started, stay started. But more importantly, there can be lots of roadblocks to getting started. So what we're going to do is we're going to remove one of those roadblocks for you and make it a little bit easier. Because the thing that I don't want to stop you is thinking, do I need a local number? How about a long distance number? Or should it be 800? How on earth am I going to make that happen so that people can contact me as I'm out there building my business, making my cash flow grow, but most importantly, understanding that it doesn't have to be difficult. Many of you may know, but if you don't, there's a company out there by the name of Grasshopper. And what I want you to do is I want you to go over to trygrasshopper.com/CashFlowDiary. Grasshopper is the entrepreneur's phone system. It works like a traditional phone system, but requires no hardware to purchase, no software to install. It's just a number that flat works. So if you are out there building that distributed workforce across many different locations, it's a way for you to still go out there and make your number be unified, simple, easy to use, something we've been using for quite some time. So again, go over to trygrasshopper.com/CashFlowDiary. Now, let's get back to the rest of the story.
I cannot take public every company that wants to go public. If there's a guy who's has a felony, he can't go public. The SEC will not allow him to sit on the board. If as long as that business plan is strong enough and the people have their history displays the ability to manage that business plan, then we can do it. Now, when it starts out, it takes about from scratch, Jay, it takes about 5 months, 4 to 5 months, to get your approval and your trading symbol from the government. Now, I'll give you another example. The little hospital corporation. They had figured out how to take a surgical center, turn it into a hospital, and using the example of their business plan, a company surgical center that made $5 million a year would automatically be make $15 million a year if they were turned into a hospital, simply because reimbursement from the government for health care is different from a surgical center to a hospital.
Huh.
Now, they had no money.
That seems to be a common theme.
If you're starting from the bottom up, if a guy's already making a couple of million, he's not going to talk to me. He's going to go to a $500 an hour attorney or a big brokerage firm, and he's going to spend $1.5 million to get him public. That's another story. Getting back to our hospital corporation. So these hospital administrators said, but we don't have any money, but we have all the license procedures and we can pull this off. Great business plan. It's going to cost them $50,000 to get to the point to where they are a publicly traded company. In other words, they can go out and start selling stock. Now, in that 4-month period, it's going to cost $50,000. The guy went to his bank, he got a second mortgage on his house, put the $50,000 in the account that they opened. They got traded, sold 2 million shares at 10 cents a share. Now they've got $200,000. And the loan that he had given the company of $50,000, he takes back and paid back the bank. Now they have administrative fees of $150,000, and they haven't started yet. Okay? So how much did it cost him to go public, Jay?
It sounds like he got paid to go public.
You're right.
Got it.
Got $150,000 in the account. Now we start building the company out.
Interesting.
Okay.
So
the thing is, go ahead.
No. Go ahead.
The key, of course, is being able to pull off that kind of a business plan. When I sit down with the companies, and it takes me about 3 hours to go from A to Z. Mm-hmm. But everything can be independently verified before they take one step forward to go public. Everything's available on their computer. Nobody can lie, cheat, or steal at any level of this. People in business, everybody will run into somebody who will go back on their word or do something wrong. You do that in a public company, you're going to jail. Okay? Nobody can lie, cheat, and steal, and that includes me. But they don't have to worry because everything can be independently verified. Mm-hmm. If I tell you, if you do this with your company is going to trade in 12 months for $15 a share. I can prove it before they start.
Got it.
Okay.
Now, in the process, though, one of the things that, at least that crosses my mind is it's no longer my company. Like, why? Good question. Because what you've done is you've given up equity. Mm-hmm. You've given up some future equity. Let's say, when we start out with the company, let's say that the insiders, the president of the company or who's ever starting, will have 20 million shares. Okay.
Now he sells to get that first $200,000 at 10 cents a share. He sold 10% of the company. Right. So he's given up. He's given up that kind of equity. But the point is he will never lose control of that company, because when we set it up, his stock will be the only voting stock.
I see.
Now, I can remember years and years ago, Rockefeller owned one of the richest men in the United States out of New York, and had the big bank, and he'd pull up every morning in a limousine, they'd let him out, and he'd go in, and he's worth all the money. He owned 5% of the bank. But his was the only voting stock. If he wanted to vote himself $50 million a year salary, that's the way it was going to be. And you look at Bezos and Amazon. Mm-hmm. It's the same thing. They're down, I don't know what he is. He's down somewhere around 10 or 12%. He's one of the richest men in the world. It's control. That's all you're looking at. You build it out in control. If, for example, let's use our hospital corporation. It's going to cost about $10 or $15 million to do their business plan. If they bring in a partner, that partner may say, well, I want 51%. Well, he can have 51% if he wants, but he doesn't have voting control.
Got it.
Okay?
Got it.
We can talk about going for millions and how you get that money, but
actually what I'm thinking about at this particular moment is everything that you're talking about requires, I mean, it seems like you have to be going for like 7 and 8 and 9 figure numbers in order to make it work. What's like the smallest business plan or outlook that where this would work?
Let's use this little bottled water company.
Okay.
Because we talked about the other day, and I've talked about how his business plan would have to be expanded. Based on what he has right now, it's only going to make a couple $100,000 a year. But that is enough to be a public company. As long as you make a profit, you're never going out of business. And when you take that money in and you're selling stock, you never have to pay that money back. Now, if all you ever made was $200,000 a year, you're not going to have a lot of fun.
No.
Okay, but for his start, it's going to work, because if that model works for $200,000 to make $200,000 a year, then that next year he can easily make $2 million, and from that point it'll just build.
I see.
Remember we talked about this sleep apnea.
Yes.
They're only making a couple $100,000 a year.
I see.
A couple of years ago. Now, 2 years later, they're making almost $700,000 profit.
Got it.
Is that enough to go public 2 years ago when he was making nothing? Of course. Everything that you do with that business plan is the same thing that the preacher will tell you when you go to church. We're going to sell the hope and promise of the future.
Okay. Got it. So what you get, everything seems to hinge, because you've said it a couple of times, that it comes down to the business plan. The business plan has to be strong. What does that like actually mean? How does one to know that this is a business plan that will work, or it's strong, as a phrase that you like to say?
We help them with that. Because so often that we have these great ideas, like that assisted living plan, where, we've got a unique model, but we don't know how to build it out. We go ahead and do the demographics. Nichols and Associates has enough people with the experience in this to take a look at nationally how big we can take this and how far we can take it. We look at people's inventions that they say, well, we have this invention, we want to take it public. We look at it and say, nah, it's not going anywhere, because here is what your competition's doing. And they aren't making any money right now or enough to support what you envision. So we really can't take you public. Sometimes they come up with something like, again, assisted living is, well, this is all we need. No. You have a project that could put 1,000 of these things and make it work. They'd never thought of that.
Right.
We have to, because when we take a company public, we do all the work, all the paperwork, the attorneys, CPAs, everything. What's put in front of the client is, here's what we're going to send to the Security and Exchange Commission. You go ahead and review it and send it off to the attorney. He's going to forward it to the Security and Exchange Commission. We do all the paperwork. We set up how the business is going to be structured, everything. But nothing is done, of course, that the client does not approve.
Mm-hmm. Got it. Okay. There just seems to be that seems to be a lot to do in that, and never having heard of doing it this particular way is probably, I would assume, a unique challenge. So what would you say are some of the things that prevent entrepreneurs from actually pursuing or considering this? Because the main thing I keep hearing you say is that we as entrepreneurs are thinking too small, and if we just knew that we had other resources, we would. But other than, our, we'll say, limited thinking, what would be the thing that you have found that prevents more of us from trying to serve more people with our great ideas?
You just said it, limited thinking. People are afraid of failure. And that's one thing that the entrepreneur has to devoid himself. I mean, what was the sort of Walt Disney? Walt Disney had 15 bankruptcies before he drew a mouse.
Right. Well, hey.
Okay. The point is, you cannot be afraid to fail. But the beautiful part of this is that if you're a public company, when you are selling that stock, you're giving somebody a piece of paper, 8 by 11, that transfer agent print it up, and you get the cash. You don't have to pay it back.
Yeah.
Don't lie, cheat, or steal. Do it honestly. If you say that if I take this money, this is what I'm going to do with it to help that company grow, and you have no debt.
Got it.
I don't know.
No, I get it. And I hear it. So, all right, this makes sense. Now, for those entrepreneurs that are listening that might be like, I think this could make sense for me, or they want to find out more about the strategies that you're referring to, what's going to be the best way for them to follow up or find out more about what you guys have going on over there?
Just go to clarknichols.com and pick up the phone.
Got it. Now, as we wind down here, I have a question for you, because I think your answer is going to be interesting. There's a number of people who are listening who, well, let's just say they're standing in front of the superhero outfit store, and what it comes down to is, in the back of their mind, they think they're ready, but they still have that voice that tends to accompany all of us from time to time, anytime we want to do something great, and it says things like what we can't do, and it reminds us of who we're not, and all of those types of things. But hey, this time, Clark, they're actually going to do it. They're going to move forward. Now, my question to you is as follows. Let's pretend that they're going to move forward and do so in the next 24 to 48 hours. What would you suggest that they do?
Call me and tell me what their plan is. Then I'm going to ask them questions about what their background is that makes them think they can execute it. If both of those things work out, I'll show them how we're going to start getting the money and how we go forward.
Wow. That's strong.
That's it.
I like it. I like it 100%. Well, I definitely appreciate what you're doing for entrepreneurs, because, again, when you can remove those roadblocks, and capital being one of them, lots of great things come to the economy and tends to help lots and lots of people. So, and I definitely appreciate you taking the time to share your knowledge, your insight, as well as your wisdom here with us today at the Cashflow Diary.
Jay Massey, you've got a great podcast. Great podcast. Look forward to next time. Maybe we can do something on public relations.
Sounds great. All right,
Okay,
ladies and gentlemen, you know what time it is. It's time for you to move at the speed of instruction. What does that mean? That means go over to clarknichols.com, because you've been looking for the money. And hey, you just learned from someone who can find it. Ladies and gentlemen, it's been fun talking to you guys today. I look forward to talking to you again soon. Until next time.